Well, hello folks. My name is Tony Hixon from Hixon Zuercher Capital Management, coming to you from Hixon Zuercher headquarters here in Findlay, Ohio, on Friday, December 12th, 2014. Today we'd like to discuss our November 2014 Educational Economic Update. Well, after a jittery October, if you remember October, we saw about an 8% pullback in the markets. About October 15th, the market bottomed and we started to head back up the other way. So throughout the month of November, it was actually a solid month in the markets. A couple things contributed to that. First off would be the revised estimate, or the second estimate, of GDP. So the first estimate came in at around 3.5% of gross domestic product growth within the U.S. Well, as more numbers began to pour in, the second estimate actually came in at 3.9%. So it was even better, and that encouraged the markets and helped things turn around throughout the month of November. The second thing that really contributed to the solid month of November would be the strides that our economy made in the labor market. So throughout the month of November, jobs came in north of 300,000. The unemployment rate was unchanged, but nonetheless, adding 300,000 jobs throughout the economy was a really good news for investors. Also, as we looked into the data, we noticed that the quality of those jobs is increasing. So less part-time employment, more wage growth, all that really bodes well for the spender, or opening consumers' wallets in the economy. Also, note that consumer sentiment came in at record highs, the highest we've seen in 7 years. And again, as Americans feel more confident in their jobs or in the income that they're making, the more apt they are to spend money in the economy. Which leads me to the fourth area that went really well in November, which is retail sales. Now, as everyone knows, Thanksgiving, Black Friday holiday. Well, Black Friday, the retail sector came in, we saw the data, and it actually came in at 12% lower than it was last year. So why is that good? Well, it's not necessarily good, but one thing that companies have been doing, or retail sector has been doing, was making the Black Friday sales longer. So a lot of these sales actually started the week of Black Friday, not the day of Black Friday. Also, as the other things that I've mentioned with the labor market and consumer sentiment being high, the sales have continued. They're not, companies aren't making this just a Friday event, but making it a longer event, and throughout the entire holiday season. And so since Black Friday, we've seen retail sales actually increase at a very steady rate, and it's actually very encouraging for us as we look at the retail sector. Now, all that being said, there's some good things there. There are also some negative things. Across the pond in Europe and China, we're seeing some slowdown there. Also, the rising US dollar is impacting emerging markets. Now, the good thing is we've got our eye on those things, and we'll make adjustments as we see opportunities arise. Well, that's it for our November 2014 Educational Economic Update. Again, I'm Tony Hixon with Hixon Zuercher Capital Management. If anything you've heard here, if you have a question on anything and you'd like to give us a call, please do so at 419-425-2400, and we'd be happy to help. On behalf of the team here at Hixon Zuercher Capital Management, we wish you and your family a very Merry Christmas and a Happy New Year. We'll talk with you again very soon.